Hello dear traders, in this review you will find out about relevant forecasts for key commodity assets and the ruble, as well as some interesting news including an interest rate hike announced by Russia's central bank. Stay tuned. While the US currency is gaining value, oil prices are losing ground. However, this movement is likely to be short-lived as many investors are gradually leaving the market due to the Christmas holidays. Trading activity in the oil market will progressively decline and volatility will become subdued. Against this background, oil prices are expected to move within a sideways channel this week. On Friday, Brent crude oil futures fell by 5% to settle at $70.50 per barrel. The pace of its decline is still fast, but the quote is already moving around the psychological level. The benchmark will most likely extend losses if the price fixes below $70 per barrel. Otherwise, it may pull back and enter the phase of stagnation. As for the foreign exchange market, the dollar is taking the lead. Like many other currencies, the ruble gave in to the US currency on Friday. As a result, it returned to the levels at which it had been before the Fed meeting. This is due not only to the general trend, but also to the Bank of Russia's decision to raise its key interest rate to 8.5% from 7.5%. The news came as a surprise to market participants. Nevertheless, in the long term, the interest rate hike will inevitably lead to a surge in the government bond yields and renewed interest from investors. So, as soon as excitement fizzles, the ruble will most likely start to pile losses. For instance, the Russian currency has every chance of gaining value in the mid-term. Thus, the dollar-ruble pair kicked off the new trading week with a gap. True, the price failed to overcome the 74.40 mark, the upper boundary of the range. The greenback will continue trading upwards if it consolidates above the level of 74.50 rubles per dollar on the 4-hour chart. Alternatively, the price may pull back, thus narrowing the gap. Speaking of gold, the asset ignored the dollar's rally and managed to stay firm around the level posted last Wednesday and Thursday. This indicates that gold has not lost its safe haven status yet. However, gold prices will hardly hit any fresh record highs in the near future. The market is about to enter a period of stagnation, at least until Christmas, which will keep gold mostly range-bound. In the meantime, gold is trading upwards despite its pullback. The quote is still trying to consolidate above $1,800 per troy ounce. This may signal bullish sentiment in the market. The asset will most likely advance further if it hits a new local high and stays firm above the level of $1,815. Otherwise, its pullback may well develop into a full-fledged correction. And well, there was this forecast for the start of the trading week. Market participants are gradually shifting their focus from central banks and monetary policies to pre-holiday activities. May your trading be lucrative. See you back soon.